Welcome back for another report on the gold market. The weakening of the US dollar seems to have allowed for gold bears to take a break yesterday, despite US yields still being at rather high levels. On gold's fundamentals though, the precious metal is considered to be used in times of high uncertainty as a safe haven, as well as a hedging instrument against high inflation. Given that analysts are currently weighing the possibility of a recession for the US economy and in more general a global economic slowdown, also due to the possibility of an economic slowdown in China, traders may renew their interest in the yellow metal. It should be noted that the greenback strength, fed also by the hawkish expectation of the market for the Fed to perform consecutive hikes, tended to put gold prices under pressure for about a month now, and gold's price had reached levels not seen since the beginning of February. Investors also await speeches from Fed Chairman Jerome Powell and other Fed policymakers later in the day, with Philadelphia Fed President Patrick Harker speaking tomorrow. Overall, we tend to maintain the view that fundamentals still continue to weigh on gold's price, yet should the market sentiment become substantially more cautious, we may see traders starting to bid for the precious metal, seeking its relative safety. On a technical level, we must note that gold's price was on the rise yesterday, breaking the 1822 resistance line, now turned to support. Yet overall, despite the rise, the bearish tendency has not been broken, given that the downward trend line incepted since the 18th of April remains intact. Hence, our bearish outlook for gold's price tends to remain unchanged. Any price increase for the time being is viewed as a correction higher and considered as temporary. Yet we must note that the RSI indicator below our 4-hour chart has reached and is running along the reading of 50, implying some kind of stabilization and indecisiveness on behalf of the market. On the other hand, the price action after yesterday's rise has created a gap with a lower Bollinger Band, which may present an opportunity for the bears. Should the bears regain control as expected, we may see gold's price reversing course, breaking once again the 1822 support line, and aim for the 1790 support level, which was tested yesterday and managed to reverse the downward motion of gold's price. Lower than that, we note the 1760 support barrier, which has not seen any price action since December last year. Should the precious metals price stabilize, we may see its price action breaking the pre-mentioned downward trend line as a first sign of a trend reversal. Should the market express an intense buying interest, allowing for the bulls to take over, we may see gold's price breaking the pre-mentioned downward trend line, the 1852 resistance line that capped the upward movement of gold's price on the 25th of January, paving the way for the 1880 resistance level. Higher than that, we note the 1915 resistance hurdle that reversed the upward movement of the precious metals price on the 29th of April. That should sum it up. From all of us here at IronFX, best wishes for solid trading.